Now it's time for us to move on to our fireside chat with Jill of Gabriel Investments. And I have recently discovered that Jill was instrumental in helping one of my favourite biscuits to be manufactured way back in the midst of
previous
time.
life.
Jill helped Hobnobs come into being, which had claim to fame like that. But Jill was also instrumental in establishing Scotland's first incubator with Scottish Enterprise in 1990. So that was the Strathclyde University incubator, and you've helped hundreds of startups since then. Jill launched Gabriel Investments in 2012, and so you told me that you have made 29 investments into new companies.
Yeah, 29, 30, something.
30.
Yeah, not all new starts and new investments. Some of it has been follow-on, even though we said that we weren't going to do follow-on. We were only going to do the startup phase. But as with lots of investments, the start of the is just the first piece that Gabriel does, but then there's the next round, the next round, the next round, and our angels, when they have come back to the table, like Oliver with their bowl saying we need some more money, a number of the Gabriel angels have said yes, we would be happy to continue to support.
But your investment thesis is that you are very early. You focus on early stage entrepreneurs, don't you?
Yes, and the reason for that was because I think it really is. So my idea for Gabriel kind of started around about 2008, when we kind of went into a financial meltdown. And we had a number of businesses that we were dealing with at the incubator who came to us saying, well, look, we've got a SMART award of up to £100,000, which does require a private sector money to leverage that £100,000, and we can't get the private money. So we've got the public sector money, we can't get the private money. So, and this started to become a recurring thing around about 2008. And the reason for that was there were several reasons for it. One was VCs, who were not huge in Scotland anyway. They left. The banks, and I'm not going to bash anybody, but the banks left that market. I'm not convinced they should ever have been in it in the first instance, because you're lending to businesses that are not creating any revenue, and they're using that loan in order to pay back the loan. It just kind of didn't make any sense. So I'm not sure that banks should ever have been in that space in the first instance, but they left. And it did leave a gap. And then the existing angel syndicates, which, by the way, thank God we had them in the first instance, because if we didn't, I think we would have been in real trouble. But they were very busy propping up their existing portfolio, because they weren't getting the exits and they weren't growing as fast as they had anticipated. So returns were taking much longer, so they were continuing to support their existing portfolio. And that really meant that the startup area was a massive gap, and the angels were saying, well, come back to us when you've built your prototype, when you've got your first customers, when you've got a bit of traction and revenues. Well, I can't do any of that until I get the money in the first place. So that's really where Gabriel kind of came about. So we wanted to create a syndicate that was going to address that gap and be complementary to, rather than competitive with, the existing angel syndicates. And hopefully we did that, and we're still doing that.
But that was quite entrepreneurial of you.
Well, I think, when you do get a little bit entrepreneurial when you're dealing with entrepreneurs all the time who come to you with their kind of light bulb moments, and I have an idea, tell me all about it. And you do hear the sort of the weird, the wacky, the crazy, but it's those individuals that come up with these bright ideas. So, and you have to learn to take those wild and wacky ideas and harness their drive, their enthusiasm, their motivation, down into something that can be distilled into something that is investable. So in that respect, you've got to become quite entrepreneurial yourself in order to be able to deal with those individuals.
Yeah.
Yeah, very much so. Yeah.
And some of the presentations we hear tonight might be wacky and wild as well, but we'll keep that off camera until later on. So what's the benefits from having such an early stage investment thesis for Gabriel?
The benefit for the investors, or
Yeah.
the benefit for the entrepreneurs?
No, for the investor.
For the investors, well, I think certainly from Gabriel's perspective, the guys that I've got within the syndicate, a lot of them have started up their own businesses. They started them up, they've grown them, and they've moved through to kind of exit, selling the businesses, and thankfully they've made some money from it. And they have realised that that you never go that whole journey all by yourself. You get help along the way. At all the various sort of stages and stations throughout the company's life. And therefore what they wanted to do was try and put back into that very early stage, knowing that the first 2 or 3 individuals that helped mentor them were probably some of the most significant inputs and assistances they were given to get the business up and running. Because that's the hardest bit, to persuade people of your vision, your dream is hard. So therefore, by bringing those kind of like-minded individuals together who have been along that journey and understand how hard it is, they get a sense of, I've helped people in their journey and I'm giving back because people helped me in mine. And I think that's hugely significant to the angels that I work with, is that kind of putting back and helping to start somebody's dream. It's pretty rewarding.
And this is why they're called business angels rather than venture capitalists or any other.
Yeah, they're different animals altogether.
Yeah, so it's a very noble and rewarding, positive environment or ambition for business, for business angels to engage in, and hopefully some of us in the room could possibly consider being, well, apart from some of us entrepreneurs, will hopefully be successful and make lots of money and be able to become business angels in the future as well.
Yes,
and to be part of that positive cycle. So there are some other benefits, I'd imagine. So if you're investing in a company early on, the valuation is lower, so you get a larger share of the company.
Yes, I mean primarily the journey is that the earlier that the angel gets into the business, the lower the valuation, therefore the bigger the slice of the company that they will take from that, because at the very early stages you're looking at the potential rather than what's actually down there in black and white. But it is a big leap of faith. It is not to put anybody who's thinking about it off angel investing. It is not for the faint-hearted. A significant number, approximately, it's a bit glib, but 8 out of 10 will fail. So the angel, in taking that portfolio approach, is going to want to say, well, out of the 10 investments, I would like to see 1 or 2 of them fly, and they've got to fly big in order to compensate for the loss of the other 8 potential investments that you do. So I think being involved in angel syndicates allows that portfolio approach. So it allows you to de-risk your investments a little bit. So I think that's kind of quite helpful as far as being an angel is concerned. But as I say, it takes a period of time. The average from start to finish of getting a return is 12 years. So I met with an individual, a lovely gentleman from Edinburgh. He was about 83 years of age, who wanted to talk about angel investing, and at the end of the discussion he said, do you know, I think I'm just going to go down the loan route. And I said, I think that's probably exactly what you should be doing. So I think you do have to think about, the length of time and how patient you're going to be. Now that said, if you get in at the start with those businesses, the rewards can be very significant. If you have been entrepreneurial yourself, being able to get in at the start of somebody's journey and be able to help them, that is massively rewarding as well, and go along the journey. And when people do it, and they get a taste for it, they love it, and they just want to do more and more and more of it. And angels, they roll their sleeves up and they get involved in the businesses. It's not like VC businesses who will kind of take a rather dispassionate view, meet once a quarter. Angels will say, well, here's my book. Here are the individuals that I know that I can tap you into. If you need more money, I can hook you into other individuals that might put their hands in their pockets. So angels offer a great deal more for startup businesses than just the money, because the money is just one aspect of it. Their knowledge, their expertise, their networks is probably even more valuable than the money. So there's lots of reasons that people get into it. Not least, they build up their own networks, which they're always looking to do, angels, is to build their networks. You can never know enough people with different skills that you can call upon at any given time, particularly when you take a portfolio approach. So the more networks that they have, the better it is for everybody concerned. And last but kind of not least, with regard to sort of angel investing, these guys they want to have fun. Because if you're not having fun, why are you doing it? So it's about having a bit of fun as well.
And of course, they're investing in companies that are doing. So let's try and think about what that fund might mean. It's investing in or partnering with companies who are doing something that's never been done before, or just really having a massive impact in people's lives. And I was just thinking about the people on the board on the wall there that Kenny told us about. It's definitely exciting roller coaster rides. But there are some sweeteners as well for angel investors, courtesy of HMRC.
Courtesy of HMRC, yes. Yeah, so it has been very helpful to draw people into the angel investment community by offering. So initially they started by offering EIS relief, enterprise. So that was the Enterprise Investment Scheme, which allowed a 30% tax break. And then they decided on the back of that to create the SEIS scheme, and that allows a 50% tax break. So I mean that for investors to get 50% tax break is on their investment is not insignificant. So it has allowed sort of further stimulation of that very early stage market. There's no doubt about it. It's a help. It's not the driver for a lot of these guys, but it does assist them. There's no doubt about it. Yeah.
And it does de-risk the investment somewhat if the company doesn't
work out.
It does.
I mean, if you're looking at if you do a £5,000 investment into any one business and you're getting £2,500 as a tax break, that's not bad.
And you get something back as well if the company doesn't work out, if it goes.
Yes, I'm not. I can't speak massively to the tax breaks, given that I'm not a tax accountant. But yes, if a business does go to the wall, then there are further tax write-offs that you can get. I mean, there was at one point, all the tax benefits meant that actually if the company went to the wall, you get more back than you'd invested in. So I'm not sure that was quite the way HMRC had perhaps anticipated it working. And I think some of that, there's been a bit of course correction on that. Because you really do, you want to put your money in and so that these businesses fly.
61.5% you get back.
So it's much less significant than it used to be, because there was a point in time where I can claw back more than 100%. That's just wrong. So right, back to the drawing board. Let's rethink that one as HMRC.
And HMRC has been quite entrepreneurial with these initiatives as well. And iterating and experimenting and looking at what happens and then changing their policies. So it's good that we're very fortunate in this country, because other countries haven't got these tax breaks or these incentives.
Yes, I mean it's been good in a lot of respects. I think what there has to be from HMRC's perspective is there should be much more consultation with entrepreneurs, with angel investors. I mean, as an example, when they did further legislation with regard to loans and convertible loan notes, which really therefore meant that convertible loan notes became something that angel investors wouldn't look at because it penalised them with regard to their tax breaks. And when HMRC were told about this, the view was, no, that's not what we've done. And the tax advisor said, well, no, that is exactly what you've legislated for. So you have kind of shot yourselves in the foot a little bit, and therefore, convertible loan notes is something that is, and Michael, you'll agree with me here, that it's something that does for angel investors becomes very problematic. Because if you do convertible loans, then you can negate some of your tax breaks. That has still got to be wound back. It was not what was anticipated would happen, but it is actually legislatively what did happen. So some things they get right, like the SAS, CIS, those breaks, and there's other things then they get wrong.
Yeah. And this, of course, is one of the benefits of being in an angel syndicate, because you have the knowledge and the wisdom and the experience of a whole bunch of other angel investors who've been there and done that.
Yes.
And in some ways, it's a bit like an entrepreneur getting a mentor or learning from other entrepreneurs. Investors can learn from each other as well.
Yeah, I mean, you get that collective wisdom. So, I mean, when we see pitches, which we see kind of once a quarter, and we'll see 2 or 3 at any given time. We have had some guys who are kind of in life sciences, and they're listening to something that's kind of very software app driven, and they'll say, well, this isn't my wheelhouse. What do you think? This is, you're a software guy, you're an IT guy. What do you think? And it's so it helps that you have that collective knowledge round the table, rather than kind of sitting as an individual angel looking for that one goose that is going to lay the golden egg. That's quite a difficult thing to do. But that is the way some angels want to operate. I kind of call them the lone wolves of this world, and that's fine. Because they feel more comfortable saying, well, I want to put money into this one business, I want to work very closely with this one business, I don't want a portfolio approach. So that's great and that's fine, but then others want that kind of syndicated portfolio, knowledge base, sitting around a table all together making collective decisions, and that kind of suits other individuals. So it's very much up to people, and people have different drivers. So it's what do you want as an individual? Do you want to work within a team, or do you want to work alone?
Can you maybe give us an idea of if Gabriel does make an investment in a company, how many angels how much might that be, and how many angels would take part in that round? So
Gabriel works a little bit differently, from a number of other syndicates, and the reason is because of addressing that very early stage kind of startup environment. What I said to my angels is, I said, look, I don't want you to invest 10 grand or 20 grand or whatever it said. I want you to invest 2 grand, but I want you to do it over 5 projects each year. So I want a 10 grand commitment to 5 projects, and I want to hear the projects on the day, and I want a decision on the day as to whether or not we're going to invest. So we started off looking at sort of 20,000 from us and 20,000 from SIB, and I went to Scottish Investment Bank, and I went to SIB and I said, so I require you to make a decision on the day, and they said, we don't really make decisions on the day. And I said, well, for 20 grand I require you to, so that we can move quickly, because it's a small amount of money. We need to be very fleet of foot, and to move things along apace. I don't want to do masses of diligence into a business that has got nothing really to diligence. Some of it is a bit of a leap of faith, and I want to sort of crank the handle, get the money in, and kind of move on to the next deal. So we work on the basis that everybody votes on the day, and if we get 70%, everybody's in. don't care if you don't like it. It's if 70% of you said we like it, the other 30% are in. Now, fortunately for us, most of the guys, like say the life science guy who's looking at an app, says I don't know it, you voted yes, fine, I'm in. For $2,000 you can do that. And that was the reason you can make these quick decisions, because you're asking for a small amount of money. So, but we've grown the syndicate. So we've got over double the number of angels, and we'll now look at investments of about 100 to 150,000, something of that order. But we still require the 70% vote. We still require the minimum 2K. But then what we do is we go round the houses and say, how much more do you want to do? So we still got the commitment on the day. We still do the 70%. We still get this massive buy-in, but then we kind of crank the handle up a little bit. And also we work with other syndicates, to do bigger deals, and that's where I think Scotland is really lucky in that I'm looking there at QuickServe and sort of PAR, Equity Gap, SIB. We haven't worked with Maven, but PAR, Equity Gap, SIB, and Kelvin was another one we did last year. We all did a deal together. We pulled a £1.5 million together in about a 6-week period.
Wow.
So it can happen.
That was quick.
That was very quick. Yes.
And
Yeah.
he was just herding all those cats.
So PAR Equity was the lead
Right.
on that.
Okay.
So they were herding all the cats. Thank God it wasn't me. And Gabriel, we went in for a slice of that,
Yeah.
along
Yeah.
with the other guys.
Uh-huh.
Yeah.
And I do know that there are even the lone wolves. They follow their friends in
Yeah.
investment deals, and
Yes.
so someone has an insider understanding of the industry, and so then they just trust each other, and
They do, yes, and then the more they work together, the more they trust each other.
Yeah.
And I know that we meet. Gabriel has meetings once a quarter, but I know now that these guys all they get together individually in little groups, and they talk about other deals and things that are not in Gabriel's wheelhouse, and that's created opportunities for them to work together as smaller networking groups. And that's some of what I said is they see as that's one of the pluses, is they build more networks, as well as the Gabriel network. So, and they find that useful and helpful.
So, do you have an ideal member of Gabriel? How would you define an ideal member? Would you say?
Say flip and say somebody who gives me the money and leaves me alone, but no, that's doesn't ask any awkward questions. No, I think so. I think the ideal for me is somebody who is prepared to take a risk, and knows those risks, and is prepared to say, I know you haven't got all the answers, but I'm in. So that's one aspect of it, but also over and above that they have some skills that they can bring to the table to try and help mentor those businesses. For each investment that we do, we attach a mentor to the investment for 6 months, free of charge to the company, and therefore I have to have a composite number of skills around the table to say, well, right, so your finance, right, this guy needs help building up his forecasts, or they need about product design or prototyping or tooling or sales, or so the more skills I've got round the table from those guys, the more I can draw on people to say, so something about this particular sector of the market, I'd like to bring you in to talk to these guys to see whether or not we can build up and make the proposition more robust. Can you help? And I like these guys to say yes. What I don't like to say is, no, I'm really busy, I can't do it. We've got some of that, a little bit of that, but most of them are, yes, happy to help, happy to input and help drive it forward. So it's the skill and the money and the willingness to take a leap of faith, a risk on a business that we don't know much about, and to work it through, because it is a bumpy ride for both the investor and the entrepreneur. It is, as I said, it's not for the faint-hearted, but it is really rewarding.
And so the members of Gabriel, are they from Glasgow or are they from the Central Belt? Where are they from?
Probably primarily the Central Belt, yeah, because that is primarily where our opportunities will arise from. I mean, we have looked at sort of engagement into kind of, you know, Aberdeen up in the north. It has its very own unique environment, and its own kind of you know, circle of networks and whatnot that we found a little bit hard to crack. And there's enough going on really within the Central Belt, and to be quite frank and honest, that is where it's where the majority of universities are that will bring out you know potential spin outs from academia. And the majority of that is in the Central Belt, and the population is primarily in the Central Belt. So that's where we feel that kind of most of our opportunities will lie.
Yeah.
Yeah.
And so how do people go about becoming a member of Gabriel?
Well, first and foremost, they would, so it's usually people say, oh, you should go talk to Jo MacAulay. She's running this angel syndicate. You might be interested in it. And we'll have an initial chat. We will send them then, you know, here's the forms that you're going to kind of fill in.
Which forms are they?
So I just send them by email.
Is that the self-certification form?
So self-certification is one of the forms. Then looking at the application form to be a member of Gabriel, you know, various other money laundering, power of attorney, so that I can kind of sign the deals on behalf of all the angels rather than running around looking for 25 signatures. So we require people to sign a power of attorney. You're not signing your life away when you sign a power of attorney, I promise you. It does not mean I have access to your bank account. So people can get a little bit precious about that, but it does mean that I can sign, you know, paperwork as it comes up, not only for the deal when we're doing it, but then for further, if there are further deed of adherencies, other kind of little bits and pieces, legalese that comes along over the course of the company's life, that means that I can just sign it on behalf of the whole Gabriel syndicate, rather than running around looking for everybody's signatures, because otherwise then that becomes hugely kind of problematic with regard to, you know, timescales of doing all of that for people. Yeah. So, you know, it's a case of coming in, chatting with me as the gatekeeper. I kind of give people an overview of this is what we do, this is what we've done. Look at our website, you can look at some of the portfolio, here's the process. But mostly what we say to people is, don't sign anything. Come along to the next meeting that we've got as a guest, see the pitches, meet some of the angels. We then ask them, you know, to if they would like to, you know, leave and maybe come back for lunch, or if we're or dinner or drinks. But the decision making process and then talking about our existing portfolio is be commercially sensitive. It's really just for investors, and the guests then are asked to step away, which they're very happy to do. And, you know, that gives them then a view of meeting the other angels, who they're going to kind of get into bed with, as it were. And, you know, that becomes, because it's a trust issue. You know, these guys, they've all learned to work together, they trust each other, and you can't just get that immediately. That's got to be worked through. So we say, you know, come along as a guest. If you like us, great, if you sign up. If you don't, then that's not a problem. It's not for everybody.
And people can be members in more than one syndicate as well.
Oh yeah, yes, and that is really helpful as well, because, you know, I've got several angels that are members of PAR, Equity, Kelvin, Apollo, and because they're at different stages, you know, say so, and I know all the gatekeepers at most of it, because it's quite a small community, and we all do talk to each other, which is really helpful. So PAR, you know, and Paul will say to me, look, you know, a couple of businesses came to me, but they're far too early, so we're not doing that. But you do that, you know. So I've sent them your way. You talk to them. Same with Equity Gap, or, you know, Equity Gap. We've done deals alongside them. You know, so we can look at doing that. And it's really good to have that dialogue, you know, between all the angel syndicates, so that if I can't solve a problem, then I could pass it on to Michael, or to Fraser at Equity Gap, or to Paul at Par Equity, to say, this isn't my thing. I don't have deep enough pockets for this. You're looking for £600,000. I'm not going to be part of that. I need you, but I'm happy to do an introduction. And then we've got Link, the local investment networking company, has been hugely helpful in facilitating collaboration between the existing syndicates and bringing on new syndicates, so that we all meet regularly, we talk with each other, and we learn and share best practice. And that's really helpful, that we're not completely precious about, you know, the opportunities that are around, because we can't fund them all. So we need to share and we need to communicate, and that's vitally important.
So do you think there's a how many angel syndicates should there be in Scotland, do you think?
Well, that's why I'm asking, how long is a piece of string? I think we've probably, so SIB as an example, so Scottish Investment Bank, who ends up being the co-investment fund partner to a number of angel syndicates, they have over the years that they've had this initiative where they match money through this co-investment. So you're pre-approved, so you're going to jump through like 25 million hoops. But once you've jumped through those, they say, right, you are a co-investment fund partner, and therefore any deal that you do, you can look to draw down match funding from us. And over the years, they've gone through a number of kind of, well, you have to reapply. And that is in order that they can maybe kind of revisit people who are members, and if they've not been doing deals that SIB is particularly comfortable with, or their gatekeeping process isn't rigorous enough or whatever, so there can be a bit of a cull. And they have, over the years, they've kind of reduced down the numbers. And I think they've got it, you know, to quite a good level. But I think what we probably need is, it's about thinking about, you know, your angel syndicate and what market is it going after. So Gabriel is kind of quite distinct about being in the pre-start, pre-revenue, kind of pre-everything, highest risk. But it's important that we have that there, and I think we maybe need a couple more there. And then when you look at the kind of 2 to 5 million space, that's still not terribly well served in Scotland. So it's not about numbers of syndicates, it's about really where those syndicates are operating and the kind of the level of investments that they're doing. And sometimes I think they're kind of quite loaded into the kind of 300,000 to about 1.5 million, and they mostly sit in that space. And the kind of the bit in advance of that and the bit after that, we could still do with some players in there.
Yeah. And it'd be good for some of these follow-on rounds to be coming from other angels rather than VCs as well.
Yeah, VCs, they're a challenge. They're a pill. The difficulty is they don't speak the same language as angels. And they come in with lots of money, but it comes with quite a heavy price tag. And the difficulty is that there can be a bit of a pushing out of the angels. And they come in with cutting big checks, but massive fees, both deal fees, legal fees, ongoing monitoring fees, director fees. I mean, it goes on and on and on. And you've got the angels sitting there going, I never did any of that, and I was the one that took the biggest risk, and now I'm being cut out, and you want preferences. Great, So the difficulty is they're still not really talking the same language, and there has been, for quite a period of time, significant discussion around, a kind of a fund of funds that would actually buy out the angels and allow them a quicker return, a lower return, so they're not looking 10 times, but 2, 3, 4, 5, very useful, and then they then get funded by VCs. And I still think there's a case to be made for that. Of looking at that kind of interim funding that allows the angel to exit, make money, and then slush its money back into the startups.
Yeah.
Because that's really where angels are really, really good, and they struggle to do the 2 to 5 to 10 million plus.
Yeah.
And if there was a conduit to that kind of interim funding that allowed the angels the exit, the angels I think would communicate better with the VCs, and you might then get things going on a better growth curve.
Yeah.
But nobody has quite cracked that nut yet.
Well, it's, nothing worthwhile is ever easy.
No, absolutely not.
And we have some entrepreneurs in the room who are interested in raising investments and growing their companies. Do you have any words of advice for them? What investors are looking for, or how they should approach building relationships with investors?
I would say that I think in looking for money, I think what you have to do is try and engage as early as possible. We get lots of entrepreneurs who say, well, I'm not ready to talk to an angel, because I haven't got my business plan ready, I haven't got my financial, but you can put yourself on their radar by saying, look, I'd like to come and talk to you and discuss what is your process and what is the timeline that I have to kind of go through. As an example, so Gabriel, we only meet once a quarter. So, and we're meeting on the 12th of June, and if you don't meet the 12th of June and you don't make the cut there, you've got to wait till September. So, and if you know that, you can start to factor that all in. And then you want to ask them, well, how do I apply to get on the radar? How do I get a meeting with you? What is your process? How long does it take? And you start to ask all of those questions in order to kind of build up a profile of when should I really think about starting to look for investment, because it's never going to be too early, because as long as you think it's going to take to raise money, you will wish that it was that short a period of time. It's significant a lot of the time, and you have to kind of build that in. I mean, we've had a number of businesses come to me and say, so we're looking for money in 3 weeks. Good luck, because that's not going to happen. So I think that you have to get an understanding of how long is it going to take, and then start to ask the gatekeeper, what is it you need from me in order for me to build up a compelling case that makes you say yes. So you need a good business plan, you need good financial projections, you need a real USP, and it's not, and I've seen this, I will take care of my customers. That is not a USP. We're going to do it better than our competitors. Oh, all right. Well, that's the guys that are already out there with customers, with traction in the marketplace, and you have not yet built your product yet. You don't have one customer, but you're going to take care of them, and they're not. So, you really have to think about, what is my USP? Have I really got something that is unique, that creates a barrier for competitors, and to really be brutal with yourself about that. What do I really, really have? And can I stave off the competition? Because that's what the investor is going to be interested in. Something that's unique, something that has a barrier, that keeps the competitor at bay and allows your business to grow and escalate. So good plan, make it succinct, 1 to 2 page exec summary, 10-page business plan, put everything in the appendices that you want, but don't give them a 40-page business plan, they won't read it. Good financial projections that are really solid. If you've got 20 million in the bank in year 5, your business plan is not right and your financials are not right. So get advice. Take the proper advice, and don't try and do everything yourself. Take on advisors, work networks, other entrepreneurs, successful entrepreneurs, and proper advisors. Take that advice on, soak it all in like a sponge. So I think that's some of the key points I would say.
Great. Okay, cool. Thank you very much. I think we'll have time for a few questions though. Does anybody have 1 or 2 questions for Jill? Anybody? Joe?
Why do you think they haven't filled that space that you're talking about? And the funded space. And is it the case that institutional investors and VCs won't buy out angels at the rate of return that they should get at that point?
Yeah.
Is that the key?
I think that's some of the difficulty, yes, because new money that comes in never wants to, say, well, why should I allow you to cash out? I'm putting my money in order for you to get a return. Why would so the VC looks at it and says,
well,
well,
I've taken the business to the attractive point to you. That's why you should.
Yes and no, but they'll say, well, I don't have to. In order for you to access my VC money, I don't have to allow you out because you're going to take it anyway, and I'm going to keep you locked in, and I'm going to probably squeeze you out with all my prefs and 3 times X and what have you. So I think some of that has got to be where that will not be private sector led. I think that's probably going to have to be something that's public sector led, at least in the first instance.
Because the preferences mean that they'll get their return before you anyway, so
yes.
it doesn't make any sense.
Yeah.
Fraser's question.
But can you build into the contract when you invest the money that you don't allow VCs to do that?
You could, and then when the VC comes along offering his money or her money, they will say, "Bin that clause, please." And what are you going to do? You need the money. So building in those kind of ties. I said it puts the entrepreneurs and it ties their hands behind their back, because the VC will sit there and go, well, you have so many draconian terms with regard to my money coming in. I'm not coming in. I'll just go to somebody else, please. Thanks very much.
Okay, Ryan?
So I'm kind of from both sides. I'm an entrepreneur also working in private equity. The investors that we see, their requirement is every single business must have a clear exit strategy. And I've kind of bought into it so much. With my startup, I'm always thinking about an exit strategy. Because I, as an investor myself, I do tiny investments, but I can't imagine, waiting 10 years for a return. Like, how do you see companies, and how quickly do you want to get your money back?
As quickly as possible.
Yeah.
I think so I mean, so Archangel, who was the first angel syndicate in Scotland, did a couple of years ago did an economic impact study, and it showed across all of Scotland. It showed it was approximately 12 years. Now that's from concept through to exit, and within that, then you talked about there were a couple of bubbles of financial meltdowns in the kind of early 90s and then in 2008. So it kind of you went through the sort of road highs and then lows and what have you. Some of them we might start to see as there is more entrepreneurial activity. We're also starting to see corporates kind of start to put their arms. There's a lot more corporate venturing going on. So those big corporates are putting their arms round startups much more now than they ever were. And we will probably see them more on the acquisition trail over maybe the next sort of 5 or so 10 years. That means that you might see faster exits for entrepreneurs, which would be really helpful, because as young entrepreneurs, they'll probably, if they cash out, they'll start again. They'll do another one and another one, so that recycling of that money becomes really helpful, as far as that is concerned. But yeah, I mean, yes, it kind of is what it is. It takes a long time. But the faster it can get done, the better for everybody. I agree with that. I don't want to wait 10 years. I'd rather not.
Thanks.
Coming from the financial side myself, what sort of due diligence do you take on the EISs, and also with the profits which you do potentially make, what do you do with that? Do you reinvest into EISs, and with the money coming in, do you make them aware of the CGT deferrals as well?
Right. So so we're not running a fund. So so the profits that are for businesses, that is, so usually what happens is it's a buyout by a large organisation, and then all the entrepreneurs and those initial investors, they kind of cash out, and that's their money. It's not Gabriel's money. I actually, as Gabriel, we own nothing. We are a facilitator. end of. We have no shareholding. We have no, so we don't make the profits. The profits don't come back to Gabriel. They go to.
I'm talking about the profit from the person, because a person invests in EIS or CIS or VCT, they can get CGT referrals. So would that be encouraged as such?
We don't. So so people will
Or
get
it's fair
individual
tax payable.
SCIS or EIS relief, and they get that as an individual.
Would you say it's an encouragement?
I would say it was definitely an encouragement, but that goes to an individual, so that doesn't go into kind of any kind of organisation. That is for each individual. Now we help the companies facilitate going through the SCIS, EIS pre-approval. But then it's between the company and then for them to filter to the individual investor, rather than Gabriel as such. I mean, we will try and help and assist and smooth things over, but we don't want to be involved. We're not tax advisors. We're not acting for all of our investors in the personal tax space. That is up to them individually. Gabriel is there to do deals and to get deals over the line and money invested into businesses via these angels. That is our role.
And what sort of due diligence do you do in the companies? Sorry, I'm
Well,
to
is it-
invest as well.
Yeah, we can only do so much. If you're talking about a complete startup, and it's say if it's got something kind of quite unique. So therefore, how do you diligence that? So we have to look at, you look at the business plan, and within that business plan, there are three kind of core aspects that we will look at. One is the amount of money needed, and does that fit within what we're looking to invest in? The people and who's going to drive it forward, and do they have the composite skills to do that? And then the technology, and what is the technology? Is it protected? Is there patents? Is it know-how? Is it is it algorithms that they're looking at? And how unique is it? And how is it staving off so you can look at what's the competition in the marketplace. So you'll get things like IP audits done. You'll look at the cash flow projections. All of that. You'll look at the team. What are their service contracts? You might, if they've got beta testing customers already, you might go and talk to them and say, what do you think about this? Who do they think their first 5 lead customers are going to be? Go and talk to them. So there's X amount that you can do, but for a startup, it's not like you can look at the historical balance sheet and their cash flow and look at that. And you can't go and talk to 25 customers. You can't look at the product because a lot of the time they've not built it. Sometimes if you're talking about something that's a smart award, they don't even know if it can be done. Because that's what the smart award is for, is to take something from concept through a feasibility study and to try and build a prototype. Sometimes it works and sometimes it doesn't. So at the very earliest stages, you will do X amount of diligence, but it's not like dealing with a 10-year-old company where you've got something to really kind of get your teeth into. It is leaps of faith a lot of the time.
I think it's also important to realize that most startups will pivot, and they'll pivot once or twice or 3 times. And most of the companies we invested in, they have pivoted quite far away from the original business plan. I think that's the most important thing people can adopt.
And even FanDuel, they had a big pivot. We're right at the beginning. Okay, maybe time for one more question from Mike.
How do you allay the fears of ambitious startups that hear angels talking about 3x, 4x, and wanting to potentially build massive companies, and if they're going to have angels at the start who are going to want a sale quickly at like only 3 or 4x? How do you allay the fears of founders that are looking for money?
Well, I think when an angel investor invests into a business and alongside the entrepreneur, there's got to be massive alignment, both in terms of sort of personality wise, their goals, their dreams, that kind of thing. So, and also if they've still at that point got a large percentage of the company. So they're driving massive amounts of, because if you've got shareholder agreements, so investor agreements, investor majorities, shareholder majorities, there's X amount that can be done to drive things through. But you've got to think about it, you know, if you're sitting there at odds, you know, from the angel to the entrepreneur, something's wrong somewhere. But I think that becomes a continuous and an ongoing dialogue and a level of trust between the two of them. I don't think you see drivers for angels to get out of businesses at a lower valuation than perhaps say the entrepreneurs than say you would say with a VC. I think I don't see that happen much within an angel community about driving to get out of things
Just the lack
before an
sort of
entrepreneur
lack
is
of
ready.
ambition with a sort of 3x, right,
Mm.
return on money.
Mm.
You know, if a company's wanting to go massive, like, surely you want to be involved with massive potential businesses. So
Yeah,
it's
and
like, how's
yeah,
that
and they
So-
do, but again, that's about, you know, it's about you bringing everybody on that journey. So if they want to go massive, tell us how you're going to do that. Take us along on that. Make us believe that you can do that. Versus somebody sitting there saying, well, look, you know, we can cut and run because you've not been doing what you said on the tin. And therefore, I've got somebody waving 4x at me. Persuade me that that's wrong. And if you can, is there something valid in there?
So I guess Gabriel will have members who are prepared to ride the go on the longer journey for the bigger return, and some people who want the shorter exits. And
Well, the difficulty is this: I mean, once your money is in as an angel, it's in, and you end up then with what they call kind of, you know, drag along, tag alongs. Gabriel, we really see just as the first stage of a journey, you know, and there will be 2, 3, 4, 5 rounds of investment, and once Gabriel's kind of done its piece, and as we dilute through each round, we become less influential, and therefore, you know, as I say, our money's in, and nobody's letting us out until everybody's out. You know, so there are no real mechanisms to say, can I sell my stake in the business? You know, as to say, when you're in for the long haul.
wow. Well, okay, we're gonna. Oh, do we have a question?
What's the biggest cause of failure in a startup?
Oh God. I would say, so when I talked a little bit about, you know, what are the 3 pieces of the, you know, the cake mix, as I like to call it. So, you know, it's the people, the technology, and the money. I would say probably the one that makes it a biggest success or a biggest failure is the people. People will drive ideas. They can take an average idea, and if they're excellent people, they can make something out of it. But if you take an absolutely excellent idea and put people on it that can't execute it, it will fail. So for me, it's all about the people.
And what do those people look like? Are there any traits in common, or
No, I mean,
coachability maybe?
oh well, yeah. I mean, yeah. Interesting. I think coachability is a key attribute. The ability to listen, take on, you know, advice, assistance, knowledge, other networks is very important. But it is the balance between, because you're the one that as an entrepreneur had the vision. You sold that vision to the investor, so and entrepreneurs can be a little bit blinkered, but I think what you've got to do, so they start out with this vision of this is where I'm going, and then they've got to slowly widen it out to start listening to people and drawing in information from people as the business grows, and learning from them. And that does mean sitting down and listening whilst still being kind of true to yourself. So it's like a lot of things in life, there is a balance between being true to yourself and that vision and that dream and what motivated you to do it all in the first place. But as the business grows and expands and becomes more complex, that does require you to listen to people older, wiser, more battle hardened and scarred, and to learn from them, you know, to try and help shorten your journey a little bit. So yeah.
Not for the
It's-
faint-hearted then.
Not for the faint-hearted. But if you do, I mean, I've dealt with lots and lots of entrepreneurs as an investor through the incubator. When it hits big, it's brilliant. It's brilliant for them. It's great for me, and it's fantastic to watch people start their journey, start their dream, and then come out the other end and be successful at it. I mean, it's any entrepreneur who's done it, who's done the whole journey, says it's fabulous. They do it all over again. So
Well, let's end on a positive note then, eh?
absolutely, yes.
Thank you very much.